Coming up on Business Incorporated. Guinea gives Rio Tinto partners ultimatum on Simandou project. Kenya and Indonesia seek MoU on food, drugs, cosmetics for better trade. Plus, Egypt rejects World Trade Organization agreements on global food crisis. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is looking at intraday. In Nigeria, the NGX had a tumultuous week last week, and it seems to be creeping into this new week. And intraday, the all-share index was down, though marginal, at 0.05%. While the JSE is trading positive, up over 1%. Egypt's share index lost about 0.28%, while Kenya closed negative on Friday, down 1.75%. And over to the Middle East, it's mostly negative. Abu Dhabi dipped over 1%, but the Dubai index took a deeper fall by more than 1.5%. While in Saudi Arabia, it toed a different path, up 0.23%. While Qatar's loss was less than the others at 0.41%. All right, now let's head on to Berlin. We have Chris Koba standing by right there. Great to have you, Chris. Well, Germany wants to address Russian gas supply cuts with a bitter but indispensable step. The government says that's what the government is actually saying at this point. But what does it look like?
It means that Germany will rely more on coal again. To reduce gas consumption, less gas must be used to generate electricity, and coal-fired power plants will have to be used more instead, the economy ministry said in a statement, and that marks quite a turnaround for the three-party coalition in Berlin, consisting of Social Democrats, Liberals, and the Green Party, which vowed to wind down its coal usage by the year 2030. The move is part of emergency measures Germany announced on Sunday to ensure its energy needs. And that comes after Moscow turned up the pressure on Western allies by sharply reducing flows of natural gas in its pipelines to Western Europe, driving up energy prices. State-owned energy firm Gazprom said the supply reductions via the Nord Stream pipeline are the result of repair work, but EU officials believe Moscow is punishing allies of Ukraine. Now, under the measures which Berlin announced, the government will allow the use of coal-fired power plants that are currently considered in reserve for use only as a last resort. The steps also include an auction system for the sale of gas to manufacturers, which, according to the government, will help bring down consumption by the powerful sector. A procedure similar to a tender process will see the state offer compensation to companies promising the biggest energy savings.
But even if Germany is able to find short-term alternatives to Russian energy, the prices for gas are likely to stay high for years. That's what experts are saying. But are there any conversations about, buffers for Germans?
It has brought a number of measures on the way, trying to take some financial pressure off people that rely heavily on their car for getting to and from work, for example, or who just live in areas with scarce public transport. The government has introduced a fuel rebate. In the months of June, July, and August, the government is waiving around 30 cents of the tax it charges on fuel. Now, that move has sparked criticism from different sides. Environmentalists say it is the wrong signal in the fight against climate change. And economists also said it'd be the wrong move because the 3 billion euros that the government is spending could end up on the balance sheets of energy companies. And that's pretty much what has been happening. Fuel prices are almost as high as they were before. the introduction of this rebate, and Germany's antitrust watchdogs have been assigned with looking at the matter. There's been more praise for another measure, a subsidized ticket for public transport, allowing citizens to use local and regional trains and buses for a flat €9 or about around $10 a month. The measure is to stay in effect until the end of August. And the government says it is planning more relief measures. There's been talk about a €300 or $315 cash handout to all employees to help them deal with rising energy costs. That's an idea Greens and Social Democrats are particularly gathering behind. The Liberals, who like to sell themselves as the party of financial responsibility, have been reluctant to agree.
And last week was a somber one on European financial markets. How are they kicking off this trading week?
We see somewhat of a small rebound on German financial markets, with the DAX in Frankfurt gaining around 0.4% in the early parts of today's trading session. But that comes as German stocks lost more than 4.5% last week alone. And indeed, sentiment continues to be clouded by fears that central bank moves to rein in soaring inflation will induce a recession. And adding to these concerns are comments by one of the U.S. Federal Reserve's representatives saying that the risk of a recession in the United States was increasing, and it would take several years to bring inflation down from 4-decade highs to the bank's 2% target. So far, though, European markets are able to pare some of their previous losses.
Thanks so much, Chris, right there in Berlin. Let's move on now to the UK. We have Juliana standing by right there. It's all about travel at this point, Juliana. So Heathrow has asked the airlines to cancel about 10% of their flights today. Seems it's some kind of baggage issue.
That's absolutely right, Laddie. Good afternoon. Britain has been plunged deeper into travel chaos because of that announcement, a surprise announcement that we got from Heathrow Airport this morning, urging airlines to cancel at least 10% of their flights because of this baggage situation. According to reports, there was a huge baggage breakdown on Friday. This trickled into the weekend. Some customers complaining that it took them about 3 hours to get their bags. In fact, some people didn't even get their bags, and they're waiting in various hotspots around Europe for their baggage to arrive. And it's not, of course, just the baggage situation. There have been hundreds of cancelled flights. Tens of thousands of passengers have been confused and left in a huge situation and an issue because there are just not enough staff to assist with them at the airports. And now Labour MPs are calling for the resignation, actually, of the Transport Secretary, Grant Shapps. He's been doing the media rounds in the past couple of weeks, basically shifting the blame to the aviation sector, saying they've got to get their house in order and their ducks in a row. But the aviation sector is saying, look, the reason why we're having this issue is because of the restrictions that were imposed by the British government in the first place. So whilst the government and the aviation sector are going back and forth, it's holidaymakers, some of whom have been waiting for a couple of years to get to their dream destination, or to visit loved ones, or to visit the graves of people who passed during COVID-19. But they're not able to do that because the system is just such a mess at the moment. And unfortunately, it doesn't look like it will be getting better in the summer.
Right, a lot of blame trade going on right there, Juliana. But Primark is running a trial. It's called the Click and Collect service in the UK. Tell us about this.
Yeah, this is a really interesting story, actually, announced by Associated British Foods, which is, of course, the owner of Primark, a really popular store. It used to be quite cheap, not as cheap as it was back in the day, Laddie, but of course they had a pretty tumultuous pandemic because it is a bricks and mortar store. They have not gone online when, of course, all of their competitors are online. So they lost billions during the pandemic, but they have announced today that they're launching this new Click and Collect scheme only in some parts parts of the country, so not in the capital just yet. But if you are lucky enough to live in the northeast of England and you have a child, then this click and collect scheme would be good for you. I believe there is going to be a range of about 20,000 items available. 40% of them would be exclusively available for this click and collect scheme. It's for parents and it's for baby items and furniture. They've got a wide range selection, and you will be able to choose from these items, go to the store and collect them. So this is the first time that they're doing this to try and see whether or not the online appetite is for them. But considering the world we live in at the moment, I definitely think that this is something that we can expect to be expanded pretty rapidly. And then, of course, it will be expanded into more of the popular items that I think people love to buy from Primark or Primani or whatever you want to call it on the day.
It's serious when Primark clothes actually get expensive. But let's look at the markets now. Any direction for the markets for the weekend? How's it look at that intraday?
Well, the markets are looking pretty good at intraday. The UK blue chip index is up in positive territory, up by a certain amount, I believe about 0.83%, 0.85%. The FTSE 100 up by 0.98%, and the FTSE 250, that domestic market, up at intraday by 0.28%. The British pound is also faring well against the US dollar. A pound will buy you $1.22 at intraday, though it's down against the euro and down against the Japanese yen. I must say, because it is the biggest topic of the week, we do have the biggest industrial action in modern history taking place in the UK this week. From midnight tonight, trains, trams, DLR, rail are all going to be down. So yeah, not another great week for commuters, including people like me and our team, I must say, Laddie.
Right.
Hopefully we'll be seeing you on Business Morning. Hopefully it will be in Vision and not me trying to scramble to get into the office. But it's going to be pretty brutal, and I'm sure we'll have lots of updates for you.
I can imagine. We'll keep tracking that. Thank you so much, Juliana. All right, now let's head on to Asia. Let's take a look at how the markets are looking there. We see shares in Asia Pacific were quite mixed today as investors monitored market reaction to the release of China's latest benchmark lending rates. In South Korea, the Kospi-led losses among the region's major markets has dropped 2.04% to close at 2,391 points. The shares of industry heavyweights, Samsung Electronics declining, and chip maker Hynix both declining close to 2% each. Hong Kong's Hang Seng Index climbed 0.42%, closing at 21,163 points. Shares of life insurer Aya gained 1.32%. The Nikkei 225 in Japan finished the trading day 0.74% lower at 25,771 points, while the Topix index fell 0.92% to 1,818 points. Australia's S&P ASX 200 dipped 0.64% on the day to 6,433 points. And the S&P 500 and Nasdaq Composite bounced on Friday as Wall Street attempted to find its footing following a brutal week of selling. But all the major averages ended the week in negative territory. Meanwhile, futures for the Dow Jones Industrial Average edged up 0.51% to 30,021 points, while also the S&P 500 gained about 0.69%, while the Nasdaq jumped 0.76%. We'll see how the markets play out for the week. All right, we'll take a break now. When we come back, more stories on the African continent. That's in a moment. Just stay with us. This is Business Incorporated. And now to our next conversation. As global central bankers raise rates aggressively in the fight to tame inflation, borrowing, we see the cost of borrowing is actually going to go up, and the risk of fundraising for MSMEs. Let's see what the options are. Let's discuss this with Adishana Adewumina, CEO, Trade Lender, join us right here on Business Incorporated. Great to have you.
Thank you very much, Laddie. Great to be here.
Yeah, so it's all about fighting, inflation right now, and there is that risk of stagflation. We're seeing the cost of borrowing, rising, at this point. Are the MSMEs in Africa feeling the heat yet?
Yeah, definitely. If you look at the NBS figure, you will see that, the capital importation has gone down, by 70%, if you look at Q1. And if you look at quarter on quarter, this has gone down by over 28%. Definitely, the effect is actually being felt by, these MSMEs who are struggling to be able to get the needed funds that they need to scale and grow.
And, with the threat of food security, rising energy costs, quite a number of headwinds, we're facing globally. But what are the opportunities available for, MSMEs right now?
So just to reflect on, what the MSMEs do for every economy, we strongly believe that, these MSMEs actually account for about 84% of the jobs that we have here in Nigeria and across, various other emerging markets. And it's quite, necessary for us to evaluate what even caused, this inflation that is making, these other economies to actually, try to curb inflation. So most of this global inflation was caused by the COVID-19 relief, which was granted to most small businesses. But if you look at the Nigerian sector, you will notice that most of our MSMEs were left out with little or no support at all to be able to survive the pandemic. Now we are post-pandemic, and most of them are still struggling to be able to find their feet. But I think there's actually a succor because now we have a high-growing opportunity for digital lending platforms to be able to support, business growth for viable MSMEs to scale and grow.
Yeah, quite a tough time for investors and MSMEs generally. But what are the funding options out there available for startups and existing businesses?
The fallback is actually for them to leverage on existing fintech solutions, digital lending platforms like the likes of Trade Lender and several others who are actually trying to be that support as of today. Just as what we do at Trade Lender, we are actually bridging this deficiency whereby these people lack needed timely access to capital to grow and also curb the increasing sector. For example, we've also seen the likes of those within the agricultural space scrabbling for input. We've seen quite some progressive support with platforms like ours and also the likes of USAID who are now supporting input, to make sure that we're able to secure food security in Nigeria and across other markets.
Right, and take for instance, let's just say, inflation, stays with us and, the central bankers, keep fighting, keep raising rates. What do you see, happening to MSMEs?
Well, I envisage an increase, because really once the supply, goes up, the cost of capital in terms of the supply end goes up. What it means is that, all players would also have to significantly raise, their rates. What it means is that instead of us, curbing inflation, then prices will definitely, skyrocket because this is going to affect every sector and everybody playing within this thing. So definitely this is what we envisage. But there's also an opportunity for the commercial banks and also the central bank to increase their efforts towards working with digital lending platforms to be able to increase more supply for these MSMEs to be able to access timely access to capital. Thank you.
In chaos, I guess MSMEs will have to find all of that. Thank you so much, Additional Adomi, CEO Trade Lender. Thank you for joining us on the program today.
Thank you for having me, Larry. Thank you.
All right, now let's look at other stories. We see Kenya and Indonesia seeking a memorandum of understanding on capacity building on food, drug, and cosmetics. The regulation to enhance bilateral trade on these products. This emerged during a business-to-business meeting between Kenya and Indonesia. That was in Nairobi. Pharmacy and Poisons Board, the CEO there and the ambassador of Indonesia were present, and a delegation from the Indonesian Food and Drug Authority. Delegation discussed and explored areas of collaboration towards improving quality access to efficacious health products and technologies, and agreed to develop a memorandum of understanding FDA is responsible for protecting public health through the control and supervision of prescription and over-the-counter pharmaceutical drugs, vaccines, biopharmaceuticals, dietary supplements, food safety, and traditional medicine and cosmetics. And Egypt is refusing to support food security agreements proposed by the World Trade Organization to alleviate the global food supply crisis and the sharp price increases exacerbated by Russia's war in Ukraine. In an effort to confront the food crisis threatening the developing and less fortunate countries in the world, the WTO is seeking to conclude two agreements among member states, one of which will focus on keeping global markets open without restrictions on the movement of exports, all the while increasing transparency with regard to the export and import of food. The other agreements will focus on formulating a binding decision not to restrict exports to the World Food Programme, which seeks to combat all kinds of hunger in places affected by wars, conflicts, and natural disasters, and also climate change. While most WTO member states expressed support for the two agreements during the meeting, the 164 member trade body, only Egypt, India, and Sri Lanka have rejected these agreements, according to the WTO. And Guinea authorities have given a 14-day ultimatum to parties involved in the development of the giant Simandou iron ore deposit to form a joint venture and start the project. The partners made up of Rio Tinto, China-backed SMB winning consortium, and the government must ensure that funding for the project requiring about $15 billion investment is effective. The head of Guinea's ruling military junta, the Colonel Mamadi and Dubois, who actually addressed the miners in the meeting. Simandou is the world's biggest untapped iron ore resource, while Rio Tinto and Aluminium Co. of China, known as Chinalco, hold blocks 3 and 4, while blocks 1 and 2 are controlled by the winning consortium. All right, now let's take a look at what's happening in the oil market. We see oil prices edged down today, reversing earlier gains as concerns about slowing global economic growth and fuel demand offset worries about tightening supplies. Brent crude futures slipped about 8 cents to $113.04 a barrel after rising as much as 1% earlier. The front month prices tumbled 7.3% last week. That's its first fall in 5. U.S. West Texas Intermediate crude was at $109.49 a barrel, down about 7 cents after rising more than $1 earlier. Front-month prices dropped by 9.2% last week, the first decline in about 8 weeks. Oil from Russia, the world's second-largest exporter, remains out of reach to most countries because of the Western sanctions over the war in Ukraine. And now gold extended losses today as elevated dollar weighed on the bullion's demand, with a U.S. market holiday expected to lead to thin trading during the day. Spot gold is down about 0.2% to $1,836.67 per ounce as of early trade, while the U.S. gold futures were flat at $1,840. The dollar index hovered near its highest level in about 2 decades, making the greenback price bullion less attractive for overseas buyers. Gold wrapped up the previous week lower as a stronger dollar and interest rate hikes by major central bankers dented the appeal of the bullion, which yields no interest. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.